Time now to discuss what's happening at Aarti Pharma Labs. Mr. Rashesh Gogri, the chairman, is joining us on the show to talk to us about just that. Hi, sir. Good to be speaking with you. I just wanted to begin by asking you, there are a lot of murmurs and chatters that we have been hearing that a lot of business is flowing from countries like China to India as far as CDMO is concerned. Could you talk to us about what the ground reality is? Are you seeing a lot more increased ordering?
Yeah, good morning. Yeah, as you rightly mentioned, we are present in the CDMO space, and in the CDMO space, we have been seeing a lot of activity because of the Biosecure Act. The innovators are forcing their CDMO partners to not move away from China for their requirements of intermediates and the key starting materials. And Aarti Pharma Labs has a strong CDMO business proposal, which with which we are able to attract more inquiries from our customers.
When you say inquiries from customers, are these new customers? Are these repeat customers? Where are the inquiries coming from?
Yeah, we have a mix of new customers as well as new, existing customers also are giving new inquiries. We have added, we are working with total 18 customers, and we are working with 53 projects with these 18 customers. So we have added almost 13 projects in last 1 quarter alone.
Why have your margins gone from 19% to 23% to 17%, and where is the long-term trajectory for it?
Yeah, basically, in terms of consolidation, if you look at, we have quarter to quarter some variance because, every quarter we may not have this, sales happening, and the sales are concentrated certain times in certain quarters. So Q4 we had good sales of CDMO, and whereas in Q1 we were having very negligible sales. Again, these sales will pick up in Q2, Q3, and later part of the year, and which will overall again give us stable margins, higher margins going forward. So to look at our overall margin, I think QOQ variability you should not look at. I think overall a trend has to be looked at.
As percentage of total raw material cost, or percentage of total, cost, where is raw material as percentage?
Yeah, we are currently operating less than 50% is the raw material cost. So I think we have gross margins of in excess of 50%.
50% is raw material cost. I mean, marketing, SG&A, debt, everything comes on top of that. So there is a lot of dependence on how raw material pricing will move for your company.
Yeah, actually, the raw material prices, we being, operating in our own intermediates manufactured at our end for our APIs as well as advanced intermediates, our dependency on China is less, and, we are buying more basic and early stage intermediates for which the pricing is quite fairly stable, or it has been going down in the recent past. So we are fairly confident that we will be able to manage the raw material consumption at current level.
You talked about improvement in margin in the second half of the year as some of the orders will start trickling in, because I understand there are some long lead orders in CDMO business which are scheduled for later in the year. But overall, you've guided for a 10 to 12% EBITDA growth. Is that enough to bring in the operating leverage to improve the margins? Talk to me about the revenue growth plans and the margin by the end of the year.
Yeah, basically for the CDMO CMO segment, we have guided that last year we closed with 170 crores of CDMO CMO sales, and this year we have guided 25 to 30% increase over that. Out of which in the first quarter we only did 12 odd crores. So in the second, next 3 quarters we have to do the balance sales of these products. We have guided for this year at around 10 to 12% EBITDA growth, and overall we have guided 15 plus percentage EBITDA growth over next 3 to 4 years. And overall, we have been expanding our capabilities, and we have invested in a greenfield project in Atali where we are spending almost 375 crores, and that project is expected to start by end of this year. And from next year, we will have additional manufacturing capacities, which will bring more potential sales for our company. Apart from this, we have invested in solar project, which will get commissioned in the second half of this year. And with that, we will be able to do a lot of savings in our electricity and expenditure. And also we have announced a 150 crore expansion for our xanthine segment, where we are trying to expand our capacity from 5,000 metric ton per year to 9,000 metric ton per year. And with that coming in 15 months, we will have enough growth trajectory to take us to this guidance in next 3 to 4 years.
Talked about xanthine. I just wanted a few more clarity around that. Overall, how's the market share situation move? Because I understand that there is competition coming in from China there as well. And the pricing of xanthine has been coming down in the last few quarters. In fact, it's down by 15 to 20%. Do you see some stabilization in pricing there? Is there an expectation of an improvement in pricing, and what's the market share?
Yeah, overall, I believe that, the chemical market is quite soft and the raw materials have been softening quite a bit. And because of that, there is also a pressure on the finished product price. And overall, we are trying to ensure that the, gross margins in terms of absolute number we maintain. And that is basically the price reduction should be in tandem with the raw material cost reduction. So that is the endeavor, and we are working towards that.
Okay, point taken. So you're expecting good growth in this year, at least in the second half overall. And then, of course, a lot of opportunity coming in from China as well. Thanks, Mr. Gogri, for making time and speaking with us. Appreciate your.
If you like this video, then like, share and subscribe to ET Now.